Why, yes, Virginia. Investing in the gig economy is a huge waste of money. Hey everyone, this is Kevin the Apptrepreneur. Welcome to my channel. If you happen to like videos like this and want to see more like it, do me a favor, hit that subscribe button, smash that like, and leave a comment below on future topics you would like to hear us talk about. We talk about finances, credit cards, e-commerce. What we don't usually talk about anymore is the gig economy. And I know that's been like a little contention with a lot of my long-time subscribers. You were drawn to the channel because of the gig economy stuff, particularly the rideshare aspect of it all. And it's been frustrating for you to like basically see me not do it. But you know, we do have a reason to talk about it today. And it's partially because of this video that I did yesterday where I finally solved the lost mystery of where Geo, the artist formerly known as Rideshare Revolution, went, or at least what he's been doing these days. And thank you so much for watching the video. Thank you so much for liking it, leaving the positive comments. It's so good to actually be able to, you know, talk about my frenemy, if you will, without there being a lot of drama behind it. But there was a very interesting conversation that happened in the comment section. I kind of realized this was worth discussing. Not to call this guy out, this was a very pleasant conversation. This guy was congratulating Geo on his, you know, business and everything and how much money he was making, and he was like, yeah, I did good last week, about $40 an hour. And of course I mentioned like, well, yeah, and you also have to pay for like gas, wear and tear, and, you know, oil changes, especially the gas. That's become a big problem. And I forgot to turn my watch on silent, and I am too lazy to edit it out of this video. And I mentioned that with whatever Geo's doing, you'll have to watch the video to find out. I'm not going to spoil that here. Link above. But his investment and what he was doing had considerably less expenses. And that's when David pointed out that he hit all of his Ride Quest bonuses. He hit his streak. He did all of that. Nothing wrong with this, by the way. And he basically said, you know, no one talks about Lyft. They always focus on Uber. And I'm like, well, they don't talk about Lyft because they're the same as Uber. Uber used to give those kind of bonuses, but then stopped. Once Lyft stops giving these bonuses, it'll be just as much of a wash. If the company survive much longer, don't know if you read the news, but both companies are financially in very poor shape. And he said, well, when Lyft doesn't give the bonuses, I don't drive. And no, I haven't seen anything on the financial report. And this, well, maybe not this back half of the comment, but this part of the comment is what inspired me to make this video. Well, when Lyft doesn't give the bonuses, I don't drive. And that's kind of where the problem starts to come in. And it's a problem that, admittingly, I have been talking about for a very, very long time. And people say that I've been talking about it for so long that clearly it must be Chicken Little, sky is falling, all that jazz. And yet, there's a reason. Now, I forgot to bring this up because I, you know, didn't realize I would be talking about it that much. But let's go over to Netflix stock. You know, Netflix stock was riding high and high on constant growth. And that's where investing in the stock market is really kind of more like gambling. And I don't think it should be. If you have like a stable company that is making profit and everything, your stock can basically be worthless because they don't want stability, they want growth. Now, Netflix was in a period of constant growth, and they got way, way inflated, in my opinion. They got all the way up to 678, but they lost subscribers for the first time in 10 years, and Wall Street freaked, and they're now down to 194.50. Now, Netflix will be fine, primarily because Netflix has product. They make their own shows, they make their own movies. They can turn to other ways to make money, like through ads and cutting back on password sharing. So they will ultimately be fine. But one of the problems that has always bugged me about the gig economy, and I guess it didn't really start, I didn't really start to think about it until the rates had gotten to a point where you could no longer rely on the rates to pay your bill. Basically, you had to figure out how to gain the system. When Uber and Lyft was first out, and then like, DoorDash and Postmates and all that jazz, yes, you could still game the system and make more money. You absolutely could. On the other hand, if you just turned on the app and started driving, they were paying enough where, for the most part, you wouldn't be losing money. There were still things you had to keep in mind, like don't drive around without a customer, wasting gas and things like that. But you could basically still make it. But then the rates came to a point where you had to rely on the incentives, on the streaks, on the bonuses. And as our buddy David has pointed out, if they don't give the bonuses, he's not driving. And that creates a huge, huge problem for gig companies. A huge problem for gig companies because it becomes a constant struggle. They need their drivers to drive, or else they have no product to sell to the public. And to get the drivers to drive, they have to, well, they have to give incentives. And that costs more money. And it's one of the reasons why Uber and Lyft and DoorDash and Grubhub were never profitable. They were only profitable in one way, and we'll talk about why at the end. But have any of you really stopped to look at what Uber and Lyft are doing? Now, let's kind of go back over here. And let's go over here. Now, I'm not necessarily criticizing you for this one. He's like, I haven't seen anything on their financial reports. And, here's the thing. I'm not going to say this is wrong because, you're driving, you're trying to make money, you're trying to figure out how to make things work in your life, and you probably aren't thinking about how Uber is doing. You're not thinking about how DoorDash is doing. It's just not a thing. That's their problem. Except it's kind of not. It's your problem too, because if they're not doing well, then you're not doing well. And if they go under, well, clearly you lose your business because it's not really yours. So how are the companies doing? Well, let's start with Uber, our favorite one. Now, I've got their maxed stock history up because they've only been public for a couple of years. I think they went public in 2019, in fact. I don't know. Anyway, when they went public, they launched at $40 a share. And even though it doesn't really say here, they ended like at $38 that day. They actually went lower than what they had launched at. Actually, I think they launched at $45. And then like a month later, they finally ticked like $1 above what their IPO price was before it started going down. And this was because, spending, you got to pay those driver incentives, spending. And then of course you have 2020, which was largely like a loss. It actually got as low as, let's see if we can't do like 3 years and get it like a better picture. It got as low as $21 because of the pandemic. And then when the pandemic starts getting more under control, it starts going up. And then there was that time where the stock market was just going crazy. And if you invested over here, this was your time to sell. This was when it went up to 60. And people were saying, yeah, it's going to go to $100, but nope. Because here's the thing, the stock market at the time was inflated in and of itself. So everything was going up, whether it was a good investment or not. This was also, by the way, when the meme traders were on Robinhood, and the thing about the meme traders is, they primarily affected AMC and GameStop stock, and maybe Dogecoin, which I benefited from quite a bit. But it also just meant the market was going up in general. So this was part of the things that explained that. And, well, once it's back to business, once you actually have to find a way to make money again, well, boom, 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 and now we're down to 27.13. We are almost at Uber's lowest point. And there's no sign of it going up. Why? Because they can't maintain their drivers. They have to give incentives or else people won't drive for them. But if they give incentives, they're not charging enough to make money. So they are always losing money, and there's not many ways that they can grow. Now, one of the reasons they might have gone up around this period was because they bought Postmates. And that is one of the ways that companies show growth. They acquire other companies. But really, Uber's dependent on you. Uber is dependent on you guys, which is why it is crazy that not enough people realize that they were in control, that they could stop, in a sense, these price cuts, these rate cuts, if you will, because enough people stopped driving and Uber has no product. They saw what happened when their drivers were forced off the road. And now, because the drivers still don't want to go back on the road, they're down here. They're almost super low again. And what about Lyft? Lyft is actually in worse shape. Like, Lyft at the moment, they're giving out incentives and streaks like crazy because Uber's got some bad press on them and they smell blood in the water. So we're going to poach Uber's drivers. But this poaching driver strategy has never, ever worked. Like, look, they launched at $78 a share. And by the way, I strongly at the time encouraged everyone to not jump onto the IPOs. I said, look, I've seen this with Facebook. I've seen this with Netflix. When you're brand new companies, they go way down. If you really believe in the long term, give them a year. Chances are the stock will be way down. And if you still believe in that company, if you still believe that they can make money, then buy it. But no, a lot of you bought at $78. And look, you have never made a profit. You've done nothing but lose money. This thing got down to $22.83 at one point. Guess what? Actually, maybe it was even lower. Was it lower at one point? No, I guess 20. But look, it's now at the lowest it's ever been. Look, the market's still open. It could be below $20, really, for the first time in its history. And this shows how this incentive thing doesn't work. Yeah, if you are a driver, it's great to get the streak. It's great to get the incentive. It's great to get the bonus. But the thing is, this is not a long-term solution for them. Now, sure, if you can personally make a lot of money off of it, I mean, $40 an hour is not bad. And, take advantage of it while you can, but you need to be preparing for the future. Because look, these are the numbers. These are the numbers. This is what it costs the company to do business with you. Like, now, I think they could totally solve this problem by raising the rates, charging a rate that's fair, and make it so that people don't need to rely on bonuses. Save those for the holidays and charge the rider more. But of course, they got into a pissing contest with their prices, Kalanick and Zimmer. And to raise them now, basically, one company would raise them first, and then the other company would do so much better. They're stuck. Now behind the scenes, they're charging the customers more and pocketing more. That's a completely different story. It's still not working, as you can see. But Lyft isn't even the worst one. I mean, look, it actually went up 13 cents while you were making this video. You want to see who the real loser in all this is? DoorDash. Oh, God. That is depressing. You want to know what the IPO price was? $140. You want to know where it wound up a month later? $193. Now, even though this is not financial advice, I do not give out financial advice. I will tell you what I am personally investing in, and I will tell you if I think it's a good idea or not, but I'm never giving advice. But off camera, I had a friend who she loved doing DoorDash. She used it for everything and said, look, DoorDash stock is at $200. I'm going to buy some. Maybe it'll be $500. And I told her, don't do it. Don't do it. Well, she did it anyway. And she started to lose. Now, she held the stock, but then the stock got to a point where, it was actually above $200. And I told her, put a stop loss on it for $200. You won't make much money if it goes below, but you should do that. This time, she listened to me. And it's a good thing she did, because it went doop, 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 doop. Oh, geez. $74. Or basically 75 is what we're at. That's basically half of the value. Of all time, this stock is down about 68%. This is not sustainable, folks. This is not sustainable. And there's a couple things that I want you to take away from this. Aside from the fact that now in pure numbers, you can see why the gig economy is a losing game. You can see why, outside of the investment aspect of it, I don't talk about this anymore. But here's the other thing you should keep in mind. Those are the numbers. And these incentives, these bonuses, they cannot afford to do them forever. There will come a time when they need to stop doing them. And when that day comes, Are you going to have a backup plan, or are you just going to think the good times are going to last forever? Because again, look, down 68%, down 42%, down 15%. Ironically, Uber's probably the least loserish out of everyone. But the bottom line is they're still nowhere near worth what they should be. These companies are not valuable. The only way they're valuable is if they sell their company to someone else. That's the only way Grubhub became profitable. That's the only way Postmates became profitable. Other companies came in, like primarily Uber, and they dumped. Now, let's do one more just to really show you how bad it is. I saved this one for last. DD Global, Uber's biggest competitor. These are the guys that prevented Uber from being worth, well, not worth more, but having total domination of the worldwide market. DD is worth less than $2 a share. Started at 14, down to less than 2. You do not want to be doing this. So anyway, that is where we are going to end this story. I'd like to know what you think about this. And by the way, I also want to end on like a very positive note. Thank you for making my other channel, the Apptrepreneur Media, hit 500 subscribers. I know it's not a huge number, but I am happy to have it nonetheless. Thank you one and all for getting me to that. Next up is 1,000. So anyway, that's where we are going to leave all of this. By the way, if you do want to get investing in stock, use the links below with Robinhood and Webull. Through me, you can get free stocks of your choose. Well, maybe not of your choosing. They will issue you free stocks. You can start investing in hopefully other companies. But yeah, if you want to invest in Uber and Lyft, I guess you can. They're cheap now. But yeah, so thank you for all that. Like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.